Well, hey, KW City View family, it is your resident bolt coach, Steve Schleter, and we are here today to go into our weekly dive into market stats and MOFIRS. And this is where we get that checkup from the neck up, what's going on in the market, and we're going to say what is based on what's happening, what's a message that's relevant right now for communication with our database, for counseling our clients. And then in our marketing and in conversations that we have with people, what is our MOFIR? What's our making offer for immediate response that invites people in to explore the opportunity of the market, that message that we put out, and then we invite them in to find out more. So we're going to go into some stats, and we're going to look at some September over September stats to get a real feel of what is happening in Bexar County and in our San Antonio, New Braunfels, Bernie MSA, so that multiple statistical area, so that we can figure out what's the messaging that we choose to put out to invite people in that might have a good match for maybe doing something today. And by the way, we got to combat the clickbait that the national media puts out there about how horrible things are. I think you're going to see in just a minute we are fraught with opportunity, and for the right piece of people, this may be the opportune moment to get in this real estate market here in the San Antonio area. So let me share my screen, and you'll see what I'm referring to. All right, so we're going to go here. In fact, let's start with Bexar County. I'm going to go here. This is our trusty tool from the Texas Real Estate Research Center. We're going to look at their housing activity trends report. And the one thing about this tool is they post a little late in the month, the monthly data. And yet I tend to want to stay with one tool when I'm giving you these updates, because I want to make sure that the same methodology is being employed in looking at the numbers, so we're not bouncing around and the trends look different or weird. And so we're going to, when we do kind of the real monthly overview, we're going to use this tool just like we're going to do today. Now, this tool gives us a couple of things. It tells us when sales were occurring, how many sales occurred in a given month for how much volume, and what the average and median price was. They then began a while back providing total listings and months of inventory. So we're going to dive down here. In fact, before we get to the current September, let's look at what was going on prior to COVID. Let's look at September 2019. So we had 2,112 sales, average price 253, median 221. 7,100 listings and 3.4 months supply. So remember that 2,100 sales, 7,100 listings, 3.4 months supply. And that was a really good market. It was a healthy, solid marketplace. Let's fast forward right here, and let's take a look at September over September 2022 to 2021. So 2,390 sales. Well, that's more than 2019. 6,446 listings. That's fewer listings than 2019 pre-COVID. 2.7 months supply. That's fewer months supply. So let's compare September to September. So we had 2,390 sales this past month. We had 2,745 back in 2021. So that is a decline, and it's a decline of about 13% in total sales activity. We had 4,167 listings back then. Today we have 6,446. We've gone from 1.6 months of inventory to 2.7 months of inventory. Let's compare median price. Today we're right at 307. In September 2021, we were at 275,000. So prices are holding up. We peaked at 318 back in June. We are holding around 307 right now, and month supply, is holding pretty steady in the mid twos. Now, notice we had a net gain of about 364 listings this past month, and yet we're still only at 2.7 month supply. And so even if we kept adding 0.2 of a month supply as we have here for a while, we're still in a seller's market for a good while. And I think there's going to be some reason to believe that we're not going to go much over mid threes in terms of month supply unless we have a catastrophic thing happen in our economy. So things are kind of remaining unchanged right here in median price. And yet let's look at our broader market. So we're just looking at Bexar County, and of course, we got Kendall, Comal, we got all of that. Let's go to our MSA. And our MSA, which they call the San Antonio New Braunfels MSA, same stats, but let's go back. They have data all the way back to 1990 here. So really cool data source here if you really want to go explore. Look at 90, median price, $63,830. Wow, 17.2 months of inventory. We were coming out of our version of the Great Recession we had here. And look at this for years, a year's worth of inventory until we got into really late 91, where we came out, we started to hit the recovery. And yet we were still in double digits inventory until December 92. So boy, you guys have it in good times right now, if I can tell you that. But let's look at September over September. So for our MSA, 3,342 sales with a median price of $327, 10,041 listings, and a 3-month supply. September of 21, we had actually more listings, more sales, 3,763. I'm sorry, more sales, 3,763. Our drop to 3,342 is an 11.2% decrease. That's all, just 11.2%. And, you could almost call that a seasonal swing. Median price in 2021 was $293. We're at $327 today. We had 6,000 active listings. We've got 10,000. So that's a pretty sizable increase there, taking us from 1.7 to 3 months supply in our MSA. And yet when we look at this, listing count month over month jumped about 580 units. And that was enough to, just like Bexar County, bump us, 2/10 of a month in terms of supply. So everything's holding pretty stable. We were actually 327.5 median, dropped to 325, back to 327. And of course, these are all for any given month, but you can see the trends, right, over time. And all of this looks really actually healthy. Can we see this continue to go up a little bit in terms of the trend of inventory? I think we could. And yet it would appear that everything's still pointing to a seller's market. Now, remember the San Antonio Business Journal article where they talked about, I think San Antonio was 64 or 68,000 housing units short of an ideal housing inventory for a metro our size. And now with builders pulling back a little bit because of the economy, they've canceled some land deals. They're pulling back on some developments. That's going to ultimately exacerbate the low inventory because we're maintaining a good sales pace. And as people get a little more comfortable coming back into the market, and even if we do get into a deeper recession, as soon as we come out of this low inventory thing is really going to reveal itself in my judgment, again, at a really high level. And we're going to go from 3.1 or 3.2 or 3.5 months of inventory, wherever we land at the peak, probably back to 1.5, maybe back to 1 as things heat up again. So let's talk about our message. The message is one we've talked about before, and it's window of opportunity. Right now, as a buyer, you have more choices than you've had in the last few years. You also have more leverage in the negotiations. We know builders, for example, we've talked about this on a previous edition, are looking to clear inventory by the end of the year. They're incentivizing with buy downs, bringing interest rates down to as low as 5.25. So another potential message is, did you know you can still get a 5.25% interest rate? And you can get an inspection, and you don't have to do an appraisal waiver, and there's all these opportunities that you can build a message around. And my key message would be, if anybody has plans to do anything in real estate in the next 24 months, we should schedule a no obligation strategy session, because the market is offering great opportunities right now for good buys, to have choices, and to actually get incentives to bring your interest rate and or cost down for a home acquisition. And then the MOFIR is to schedule a no obligation consultation. Call me today, period. And so that quick call to action, that's your MOFIR. So you got a message that matches the market. You got a MOFIR, and then you've got to be able to pull these resources and share with them the evidence that says, here's the stability in our market. And, we've gone back and we're showing you some of the headlines and things that are going on some of the previous editions. Stay tuned into this. We're going to keep you educated and informed so that you can really be that trusted advisor and resource for the people you serve. So that's this week's edition of Market Stats and MOFIRS. See ya. Bye.